In today's MTPredictor video, I would like to look at how the US E-minis unfolded yesterday, which was January the 13th. In particular, I'd like to look at a trade setup that was unfolding while we were doing our customer-only training webinar yesterday. Now for this, if I scroll back a bit, this was an advanced manual setup that we look at quite a lot, which we call our VSA or volume spike analysis, and it unfolded on this bar here at 10:27 and this bar here. There's more information on this setup on other videos on the website, but basically what it is we have a volume indication on our, or a colored indication on our volume indicator here that spikes red when there's unusually high volume, as you can see it did on this 10:27 bar. So when do we use this? Well, we don't use it any old where. We only use it when we have a wide range bar that's making a move above a psychological important level. So let's have a look at this 10:27 bar. As you can see, this made a new high above the high earlier in the day, and also the highs back here. So there's like 1, 2, 3 highs. If I put a tag on this particular high here from yesterday, you can see we just came up to there, backed off again. So this was an important level around the 16,384 level on the YM. So what do you think amateur traders would be thinking when the market on higher volume broke through this level with a nice wide range bar? They'd all be saying, yippee, let's go long, because a break to new highs on higher volume means buying, therefore let's go long. Now this very often is not the case. Very often this is professional traders stepping in on the opposite side. So how do we make a trade setup using our MTPredictor tools? Well, we have the advantage in that we have a decision point level that we can place on the chart. Again, these are levels that are leading and in advance. So we would have gone back to this prior high, right mouse click, we'd have known before the market even got there that this was an area where resistance was likely to happen. So what did happen? Well, it went right up into our decision point resistance area, then reversed back down with the red sell bar at 10:30. Now this is very important, because if the bar after our VSA setup bar fails to follow through, in other words in this case fails to keep on making new highs, it means that the higher volume in our 10:27 bar is actually professional selling and not buying. In other words, the professionals are stepping in here and wanting to take new short positions to then move the market lower. And as you can see, that's exactly what happened. So how do we get a trade set up in and around this? Well, we know from other MTPredictor analysis that the target for this would be the DP from the last swing into that high. So we come back to this level, we right mouse click, we place the decision point on, and there it is down there. We right mouse click, we use our manual risk reward tool where we short one tick below the low of the red sell bar, our protective stop one tick above the high, and our target at basically our DP level down here. And as you can see, this set up a potential trade of approximately 4.8 times the initial risk. Remember, we use our correct position sizing to keep our initial risk small and under control. So this is what I showed at the time in our training webinar yesterday. Let's scroll forward a bit, and as you can see, the market came down, reached this level here perfectly where a potential 4.8R profit was available. However, now, because we're short, let's have a look at our trade management. If we go to our STF indicator, on the way down, the STF had gone strong. Now what do we mean by that? It was strong because it had gone past our strength band, which is our grey lines there. It doesn't have to happen at the time of the setup, although it was actually going strong as this as we had a couple of inside bars here. It was actually going strong at that level as well, so it was strong there and strong before. So what does that mean? Well, it means we swap to our ATR stop, which is our red dots here, and that means you would have actually held the short trade all the way for the rest of the day. You can see it never broke that ATR stop going all the way down, so that means you'd have held the short trade right until a close where you'd have had a 16R or 16.8R profit. What does that mean? Well, it means that an initial risk of $400 was turned into a profit of approximately $6,700. These are absolutely amazing trades. Profits like this don't come through very often, but as you can see here, this would have meant being short from pretty much the high of the day, holding it all the way through into close for a profit of approximately 16 times the initial risk. An absolutely brilliant trade. How does this fit in with our larger degree trend? Because we like to look at not only our VSA setup, we like to look at see how that fits in with our larger degree trend. So I'll just clear this off. I'll just go to our 15-minute charts. Actually, I'll do this way. Go to our 15-minute YM chart, and here you can see that VSA setup was actually coming in at a TS3 sell on the 15-minute chart. So that also gave indication that a larger degree high was in and the trend was down. NQ didn't quite do it. ES, which is what we call the boss, which is the one that drives the other markets, also had a TS3 sell, so at that time was also indicating that the larger degree trend was turning, a high was coming in, and therefore the market was going to go down. So you can see that our VSA setup fitted in nicely with this. I do want to do one other thing here, is that, as I've already said, we then look to the last swing onto the highs or lows for potential support. So if I place the 15-minute DP on this 15-minute chart, this would be an area of where we were thought the market was going to get down into. So let's now drop this down to a 3-minute chart. So this is very interesting, because at the time where we were looking to take profits potentially at our TS4 buy setup here, it was actually not quite at our large degree support zone. So at this point in time here, the large degree trend was still down. If we look at the STF color, as this TS4 buy setup was coming in, was actually red. Therefore this was against an otherwise downtrend. Therefore you would not be looking to take that buy setup. So therefore, as you were short, there were two reasons to hold your short trade even longer. One, because the STF was red. Two, because you had not, I repeat, had not reached large degree support zone. Let's have a look, just in case you did decide to take profits at the first target. So that would have been your entry level. This was your first initial target. So let's assume, as a devil's advocate, look on the other side. If you had come down here and banked, say, 4.8R profit there, and said, okay, thank you very much, perhaps you'd then look to go long at this level here, and perhaps you'd have put your stop to break even, and then got stopped out to break even. Was there any way you could have got back into this trade to make another profit as it carried on down? Yes, there was. You could have done what we call a trend continuation trade, where you could have looked to sell one tick below the low. Your protective stop would be one tick above this little bump or the high here, and then your, oops, I'll just do that again. Let's just clear that all. So you would have been short from one tick below that low, protective stop one tick above the high, and then obviously still trailing with the ATR stop down into here. So that would have meant a plus 4.8R profit, or can we call it 5R, to make the maths easier there, and then an almost 6R profit on the second trade down there, which would have again been a very, very nice trade. So 5 plus 6 is 11R. So again, a very, very good day there. Why would you have wanted to do that? Well, as we've already seen, we'd have wanted to do that because the large degree trend was still down, as we've seen on our 15-minute charts. So there are a couple of ways to play this. If you had have taken the initial short and then done a trend continuation later, it would have been a good trade. If you had have done the initial trade right from the top here, well, that would have been absolutely spectacular, with, as we've seen, a potential 16R profit down into the low there. Either way, it was a very, very good day for MTPredictor yesterday. Either way, all MTPredictor customers should have caught this VSA Sell, because it's an advanced trade setup that we teach again and again and again with the software. And this just shows that why we do our advanced training is because we can take the MTPredictor software to much higher levels. In other words, we don't just follow our automatic setups. There are additional tools and advanced trade setups that we can use in the software that take advantage of our greater understanding of volume and how the professional buyers are coming into the markets, as well as our larger degree trend and trend management with the large degree trend. So this has been a good example of what the more experienced MTPredictor customers can expect to find when they actually do trade setups like this. And as you can see, what a great trade off the high of the day there down into that low. So this is what's possible with the tool set that's in the MTPredictor software program.